everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 2nd, 2021, and Bitcoin is looking bullish, right? We're on an uptrend. We've been in an uptrend since October 1st, early in the morning, Eastern Standard Time, and we haven't let up. There have been some short, minor retracements, but that's just normal in price action, but nothing major. It looks like we're really shooting up, and it's very characteristic of the third Elliott wave. If you're subscribed to the channel, you'll know we use a lot of Elliott wave analysis here, and in Elliott wave analysis, the third wave is the most impulsive, the most momentous, the strongest, usually the longest wave. Not always, but usually. Never the shortest, but usually the longest. Okay, so we counted out the first wave, 5. This is clearly a second wave retracement, and now we're on the third wave. Okay, and we see that we have a nice kind of resistance here that was formed in ABC by the ABC correction in the second wave, and we broke out of that very convincingly. Are we going to retrace? Usually you do. You retrace the site of the breakout, okay? Now, since we're in a bull run, will we retrace all the way back down to 45, the site of breakout? Maybe not. We may leave some imbalance. And you see that in bull markets where imbalance is basically, for those of you who are not subscribed, is when there's only buyers or only sellers. For instance, here, we're on the daily, only sellers, right? There's no buying pressure, and then there was some buying pressure here to balance that out. So imbalance is kind of something that nature or markets don't like. Markets are basically an extension of nature, human psychology, right? Buying and selling, fear and greed, patterns. And if we have a lot of buying and no selling, it's likely that price action come back down to balance this imbalance, even on the daily chart, on any time frame, right? So that is the cool thing about sort of the theory of imbalance. If you're getting value, please like the video, subscribe to the channel, and share. So basically, the whole purpose of this is educational. You know, I want to educate myself as much as possible, right, by charting frequently and continually learning and improving myself, and I hope to share that with all of you all. So that's the main purpose of the channel. Obviously, I want to leverage that into life-changing wealth, and I hope you do as well. All right, so let's get back into it. So like I said, there is imbalance here, and it's likely to be redressed. The other thing I want to point out is we had a clear W pattern here that we broke out of, okay? And everybody knows that these kinds of patterns, their targets are essentially from the top of the pattern, basically the neckline, to the bottom, and superimposed to the site of breakout, which would be around here-ish, right? So I'd say Bitcoin has until about 49K, 50K thereabouts, and at which point we should see that retracement back down. So we should be running a little more and then come back down and retrace somewhat, right, to kind of redress that imbalance, as I said, right? We can look at like longer term projections, but if you're trading, right, you don't want to look too far ahead. You want to trade piece by piece, and the way you make money trading is by compounding gains, winning one trade here, one trade there, one trade here, one trade there. You know, I know some people swing, trade, and leave their trades in for longer periods of time, but you're then at the mercy of a capricious market. Anything can happen, really, right? So I think the best idea in trading, and I've said this before on the channel, is minimize the time in. It's kind of like a bank theft. You want to be in and out, you know, do one move at a time, compound those gains, whether you're shorting or you're longing. And I think that's the best way to trade. Not necessarily have to be a scalp. It could be a short-term swing trade, but like the long-term swings they're usually not as profitable as the other types of trades in my experience. Okay, let's go into smaller time frames just to see exactly what's going on. So we saw here yesterday we broke out on the 1st. We have a nice long green candle. I mean, this is on the 4 hourly, definitely going to have to redress this imbalance here. You see that here, we had this big green candle in our Wyckoff accumulation, and it almost, all of the imbalance almost got redressed. You see, there was selling pressure here. Now, huge green candle buying pressure. The retracement comes down all the way almost to close the gap. So there's very little gaps. And I hope you guys see that. That's so useful. Sometimes only using price action, no indicators needed. You can tell where price is going to go. Price is attracted like a magnet to imbalance. It's just natural, kind of like water flowing downstream, or any fluid into a vacuum. So that concept is very powerful if you're trying to figure out, where's the price going to go down to or up to. Use imbalance, right? They use it a lot in Forex. So yeah, all of this imbalance is most likely going to get redressed. Most of it, not all of it. So I could see price coming back down to 45K, most likely. And but not until, as I said, we play out this pattern, this triple bottom, essentially, which has that target. Let's just measure it again on the 4 hourly time frame. So this was the breakout. Yeah, it looks like it's 48K here, because if you look at it on a smaller time frame, and I think the smaller time frames are more accurate, this is the neckline, and this is the breakout here. So one could say that we've met the target, actually, spot on, 48.5. One could say that that is the target, and Bitcoin is now probably going to move up just a tad bit more, but there's strong resistance here at 48.5. So this is when we turn on our indicators. Like I said in a previous episode when I was talking about using indicators and how to use them, you want to use them to corroborate, to find a corollary to your initial sort of analyses, right? You don't necessarily want to use them in a vacuum. So strong uptrend here. This is the Vital Algo indicator, by the way. This is what I use. And Vital Algo is a partner to the channel, a sponsor and a partner to the channel. So if you want to use Vital Algo as well, I'm going to pin a comment in the comments below, and you can get 25% off if you use code ESDEAN at checkout. Okay, so you can see here strong uptrend, but then the indicator calls for a reversal, just like I said, around here at this point, right at this candle. So the indicator is basically confirming my analysis that 48.5 was the target of this move, and that we're likely to get a retrace from here, right? A reversal kind of indication has been printed on the 4 hourly time frame, and this is strong support here. We have this line of resistance that's been printed, and these are lines that the indicator prints, and so since we're above it, it's going to be support. So I don't even think that we're coming down all the way here. Like I said, we're in a strong bull trend. So we're likely to come back down probably to 45. Maybe we make it all the way to 44, but that's what I see for Bitcoin here. Let's move in even closer to the 1 hourly time frame to see more closely what's going on. Okay, it looks like that was an ascending fifth. All right, let's turn the indicator off just so we can get some clarity. Okay, this is a pattern that you see a lot in our Elliott wave analysis. It's a diagonal fifth wave, okay? Usually you can see the fifth wave ending like that in a diagonal. So that is called I think it's called a diagonal fifth or something like that. Basically, the fifth wave ends in a diagonal. And so if you count this out, it'd be the following. First wave, second wave, complex correction, third wave. Hold up. No, I counted that wrong. Here we go. First wave, second wave. Nope, that's right. I was right the first time. This actually isn't the fifth wave. Hope you guys appreciate me doing this live. Hopefully this is helpful. This is not rehearsed. This is not pre-recorded, or obviously it is pre-recorded, but I didn't work this out prior. So you can see how I'm working this out live. So this is definitely the first. This is definitely the second, right? This is the third wave. This is the fourth wave. And why am I seeing a diagonal fifth on the fourth wave? It's because, remember, Elliott waves are fractal, meaning within each and every one of these waves, you have 5 waves, within each and every correction, you have an ABC correction. Okay, let's take this off just to see more clearly. Let's take this off as well to see more clearly. So I hope everybody understands that. Why I saw a diagonal fifth, ending fifth, that basically means that that's the end of the third wave. Do you see? That doesn't necessarily mean it's the fifth wave of the larger movement. It just means it's the fifth wave it's a fifth subwave of the third wave, which was an exaggerated third that you got here. Huge third wave. Then you had a complex or a simple fourth correction, A, B, C, right? Because by the law of alternation, you get a complex correction in 2, you get a simple one in 4, and vice versa. So now what we can do is actually measure the fifth wave by way of our rules, saying that the fifth wave is going to be the inverse 1618 of the fourth wave. So I'm just taking the fibs, pulling them out for the fourth wave, and the 1618 of the fifth wave, or of the fourth waves, gives me 49198 as the target for the fifth wave. So that basically says that Bitcoin still has, from here, at the time of recording, we're at 48,000, say. Bitcoin still has about 2.6% to go before reaching the top of this move, at which point we can expect a correction, a retracement, right? And as you can see, we're forming a very nice cup and handle. It's kind of a left-handed cup and handle, but we're forming a nice cup and handle. So I hope you guys appreciate that live analysis. A lot of other channels, they'll, do it. They'll prepare it beforehand. You can't really see the process, but if you appreciate my doing all of this live and direct with you, and seeing my mistakes, seeing how I'm working through my process, like, subscribe, share the video. Like I said at the beginning, I really want this channel to be educational first and foremost, because I think the way you make money and the way you succeed in this space is by learning about charting, technical analysis, learning about fundamental analysis, like learning about how to invest, how to become a better investor, how to become a better trader. And that's when you really are unstoppable. You can make money in a bull market. You can make money in a bear market. You're unstoppable. You really can take full advantage of the crypto asset market. So that's what I'm seeing for Bitcoin. We still got space to run. What that means is, because we still have, a little under 3% of upside left, that means that altcoins have time to run. So for those of you who are subscribed to the channel, you'll know that I was in a Litecoin trade. I got out of that trade, took profit, and I parlayed or took those profits and put them into, last night I put them into Tezos. And early in the morning, I took profits from that trade, and I compounded those into Luna. which started running. Okay. And this is my trading portfolio. This is not my investing portfolio. I have not touched my investments. They're just sitting there. Most of them are gaining every day. They're compounding. They're accumulating because they're being staked. And I'm only going to trade out of those at the top of the market, or when I think we've reached the top in that particular project. But for trading, I think this is really the best strategy. Is you do a trade and you swing your profits into another one, and vice versa, and you keep doing that. And then when everything's correcting, you do the same thing for shorts, if you know how to make money shorting, or you just wait for entries. You can short that way, basically spot short, meaning you wait for the price to go down to where you think it's going to go, and then you make your entry. And that's probably the safest way, because it's one of the most challenging things in my experience is shorting really, really, really bullish projects in a bull market. I mean, it's very, very difficult, because in particular, the B wave is usually not just a wave, it's like a range, and it can last forever. And then the C wave never goes in the direction you think it goes. Sometimes it goes up, sometimes it goes down. I mean, you got all kinds of things going on. So that's just my advice. Swing your profits into trades, and get TPs. Use your technical analysis to find these patterns and find TPs. For instance, the trade I'm in at present is Luna. I got in all the way down here, and the way I got the target was obviously just taking the height of this pattern from the neckline, superimposing it at the site of breakout, and that's what gave me the 52.5, something thereabouts. And I can obviously check that more carefully, but you put in your targets there, you take it, and then you get out. So that's Bitcoin. That's the market. We're doing really well, and I hope that this was useful. If you like the video, subscribe, share, and I'll see you guys soon.